Oh, hello everyone. Hope you are doing well. Today we will be starting our level 1 trading course, and you will be getting a certificate at the end of this course. Each week we will be having different levels. We'll start with level 1, which is today. Next week will be level 2, and we'll be moving on until you're going to be an expert in trading. Today our session will be about some things that will be basic, uh, terms that we need to know, and how to use MetaTrader. And moving on with the next steps, it's going to be like a full course that you will be given from my side. If you have any questions during the webinar, please plug them in. I'll be answering all the questions at the end of this webinar. So basically we have different trading sessions as in different timings to trade. The trading market is open 24 hours a day, but that doesn't mean it's always active the entire day. In this sense, we know also that the market is open only for 5 days. So it's Monday, Tuesday, Wednesday, Thursday, Friday. Saturday and Sunday are days off. So you can make money while trading when the market moves up, and you can even make money when the market moves down. What do we mean by this? It means that whenever the market is going upwards and we are buying, we are making money. And whenever the market is going down and we are making money, this means we are selling. But we will have a very difficult time trying to make money when the market doesn't move at all. So sometimes the market is asleep. We don't see the market moving. This means that it's going to be a hard time in order to make money. And then we do have here different timings: Sydney time, Tokyo time, London, New York. These are 4 different time the market is open. So basically, based on Dubai time, from 12 p.m. until 9 a.m. Dubai time, Sydney market is open. Tokyo is from 3 a.m. till 12 a.m., 12 p.m., which is 12 noon. The Tokyo market is open. At 11, the British market, which is based in London, opens and ends at 7 p.m. This doesn't mean that the trading stops. This means that market will be quiet. And then we have the most important market, which is the New York market, that starts at 3 p.m. and ends at around 2 a.m. Dubai time. So UK's major data release come out at 11:30 a.m. Dubai time. So most probably the news that comes out for the British pound or in the UK is at 11:30 a.m. Dubai time. And the US tends to publish this data from 3:30 p.m. until 6:30 Dubai time. So basically, most of the news in the US timing comes from 3:30 till 6:30. Here the market is volatile, movements are crazy, depends on the news that's coming and depends on what factor of news is coming out. So how to read a trading quote in the market? Prices are quoted in terms of other currencies. This is because there is no measure of value for opposing. However, the US dollar is used as a base currency for determining the values of other currencies. Here in our example, we do have the British pound and the USD. What do we mean when we have both? As we can see here, the JPP and the USD. So these are 2 different currencies. As we can see, we have the base and we have the code currency. So always against each currency, or like for example gold, against it there is the USD. Okay, so for this example we're gonna move on. So what is a pip? You need to become very familiar with the term pip, which is PIP, if you're going to get into online trading. Pip stands for price in point or percentage in point. A pip is the 4th decimal point used in pricing. It's equivalent to 1% of 1 basis point. As most currency pairs are priced at 4 decimal points, it's the smallest price move that an exchange can rate from 0.0001. Now, it's an important term to know for currency trading because the spread is actually quoted in pips. We'll look at the spread a little later. So let's look at an example to make it a bit clearer. You'd like to trade on Euro USD. So basically we have the base currency and the quote currency. It's all based, we have two, Euro and USD. The price of Euro USD is 1.1060. Before you're about to enter the trade, you see that the price changes to 1.1059. It decreased. This means that there has been a fall in price by 1 pip or 0.001. As we said, it's always the fourth fourth digit after the decimal point. So it's like 1, 2, 3, 4. Okay, so now here it decreased to 9. So 60 to 59, it's a 1 point. This is how we calculate number of pip. So now you're comfortable with what pip is. We're gonna move to step 1. Divide 1 pip, which is 0.01, that decreased from the previous example 1.060 to 1.059. As you said, it decreased 1 pip. We divide this 1 pip by the current market value of your chosen pair. So I divide 0.0001 by the current, as you said here, it's the current price. Then we multiply it by our lot size. So for example, Euro USD price is currently at 1.5510, and your lot size is a mini lot or 10,000. What is a mini lot? Is 0.01. So the value of the pip is 0.0001. As we said here, for example, this one is the amount of pip that it decreased. Okay, and then we have here 1.5510. This is the current price. As we said, we divide the pip number by the current price. We multiply it by the lot size. It's going to give us 0.6447. In this example, should the market move by 1 pip, you'll earn or lose 0.6447 euros. This is how we calculated if the market moved by 1 pip, how much I'd be either losing or winning. It depends on the position I've taken. It's either a buy or sell position. So what's different between bid and ask price? As we discussed before, when you're going to be trading, you need to understand how currencies are actually priced. We know that currencies are actually traded in pairs, as we said, like for example, Euro USD, British Pound USD, Gold USD. So there is always two pairs, with the value of one currency appreciating or depreciating in value against the other. So either one is going up and the other is going down, or vice versa. It depends. Now, when we buy and sell a currency pair, you're actually buying one currency while selling the other currency. So basically, if you have Euro USD and I'm willing to buy Euro, this means I'm selling USD, logically speaking. So the bid price is actually the price where you sell a currency pair. So it's the price of buying the base currency against the counter currency. So what is a spread? Now we're gonna ask, basically, this is one of the most important things you have to know. Spread is something that a broker, this is how brokers make money. So basically from our side as an STP broker, we do make money only from spreads. So the difference between the bid and the ask is our profit. So another common term in trading world is the spread. It's a crucial concept that you need to understand when working out the cost involved while online trading. So the spread effectively means the difference between two prices. As we said, it's like subtracting the price from the other price. It is the gap between the bid and the ask price of your chosen currency pair. So it's bid minus ask, we will get the spread. This spread is the profit that the company is making whenever you open a trade. So here is an example. We have the first of all, we have the Euro USD base code currency, currency. We have the price 1.20005. This is the pip. And we have the USD for 1.2008. So what are these two? These are like the bid price, which is like when you buy, and this is the ask price. This is when you are willing to sell. We have the base and we have the counter currency, point pip 5 and 8. The spread is this number is the bigger one minus the smaller one. It's going to be 3 points. So basically the profit that we made is 3 points. As you've already, of course, it differs on the amount of lot size you open. And then we move on. As you've already learned, the bid is the price at which you sell the base currency, and the ask is the price at which you buy the base currency. Basically, here is the price at which you sell, and the ask is the price at which you buy the base currency. Now, the spread is a cost that you incur for placing a trade. This is how much you paid in order to enter into this trade. And always we look forward to have minimal spreads in order for you to be trading on a good level and to make more money. This is one of the aims that GoDo gives. We look for low spread always. So whenever you want to trade, just look at the spread. As long as it's low, I'm going to enter this trade. Now, moving on. We have two things, leverage and margin. So you've decided to trade with a leverage of 1 to 100. GoDo provides leverage up to 1 to 400. So you've deposited $1,000 with your broker. However, you're actually able to control $100,000 for trading. What's the reason behind leverage, and what's the reason behind having something called leverage? For example, if I'm a trader, I'm willing to start my trading journey with $1,000. $1,000 never can make me allow to even buy 1 ounce of gold. So what leverage helps me with? It will increase my capital. This is what the company gives you. As a broker, I can manage this and give you this amount of money in the back end to deal with. So if, for example, it's $1,000 and the leverage is, for example, let's say 400, this means that you will have in the back end a $400,000 for trading. So this means that when you're trading, the profit that you made on a trade is actually amplified because you're using more money to trade that you have effectively borrowed from your broker. What do we mean by borrowed? As we support you with this in order for you to open more trades, in order for you to have more exposure, in order for you to have higher margin level, and so forth and so more. How to trade currencies? The value of each currency depends on the supply and demand for it. So how can we know if the market should go up, should go down, based on what? Based on what factors? News factors, supply and demand. Supply and demand is basically here, like for example, there's a lot of demand on USD, gold will go down. There's a lot of demand on gold. This means it will put pressure on USD, and USD will basically go down. So the exchange rate itself is basically the difference between the value of one currency against the other. It's the exchange rate that determines how much of one currency you get in exchange for another. Example, how many pounds you get for your euros. So basically how much I will get British pound against how much euro I have. So basically it's like, tell me how much. The word of how much determines the exchange rate. At this point, it's important to remember that the exchange rate is continually fluctuating. So it always moves up and down. It's fluctuating. It never stays stable, as we know, because market moves within seconds. So we have the word appreciation. It's an increase in the value of an exchange rate. Whenever we hear the word appreciation, let's use these words in the Forex and trading. So appreciation is an increase in the value of an exchange rate. Depreciation, devaluation, it's a decrease in the value of an exchange rate. Gapping, it's an opening price significantly above or below the previous day's close with no trading activity in between. This means that a limit or stop orders could be filled at price different from desired order price. Gapping is, for example, I'm going to give a simple, clear example. Friday, the market was closed. Before it was closed, I opened a position of gold. Okay, let's pretend gold was 1900, and on Monday the market opened. Monday at 2 a.m. Dubai time, the market opens. When it opens, there will be a gap. This might be due to an incident or something that happened during the weekend. Maybe there's a lot of demand on gold during the weekend, the market was closed. We will see something called gapping. This means that instead of opening the market at 1900 the way it closed, it will open at 1910. So you have to always be aware of this. We do also should have something called risk management. What's the reason behind risk management? As a trader, before entering any trade, you always have to have risk management. It involves the use of strategies in order to help control or reduce financial risk. An example is a stop loss order, which is used to potentially minimize losses on a trade. Now, basically, I'm giving all the terms. We'll enter into MetaTrader 4 within minutes, and in this way you will be able to see what each of these mean. So why do we use stop loss? A stop loss order is a risk management tool allowing position to be closed once it reaches a specific preset price. This can protect us against further losses on an open position if price continue in an unfavorable direction for the investor. Stop loss means that, for example, if I'm on 1900 for gold and I want to buy gold at 1900, I plug in my stop loss. Stop loss should be always below the amount of the number I'm gonna enter with, since and I'm willing to buy, so stop loss should be below the trading number I'm gonna enter into. So for example, if it's 1900, my stop loss maybe would be 1895. Okay, so placing a normal stop loss order does not guarantee you will be filled at that particular market price due to slippage. So sometimes market moves a lot, there's gonna be a slippage. Let me check. Okay. So what is take profit? A take profit order is a risk management tool, allowing a position to be closed automatically. Once it reaches a specific preset profit goal, this can protect against profits being lost in an unexpected reversal of price direction before the investor can close the position. So as we said, like we have the stop loss. Stop loss will allow me to, for example, it will manage my risk that I'm losing this amount of money, which is what in other sense take profit is. For example, as you said, we bought gold at 1900, so I'm willing to buy gold at 1900, and the price goes up to 1910, and my take profit is at 1910. This means that at 1910 my position will be closed. This is where I plugged my take profit. From the word take profit, I can know the meaning exactly. Now moving on into profit and loss, this proceeds of a trade, which are from realized closed trade position. This is how much I make profit or loss. Okay, so now let's move into MetaTrader 4. So basically here we can see the MetaTrader 4. If someone can please just plug to me through the chat just to see if you're seeing my screen well and everything is clear until now. Okay, perfect. So basically I can see everything. So as we can see here, we have 4 charts. I can plug in more and more charts here. If you can see, like I can just add more charts by one button price here. Pressing this, like for example, I'm gonna just mess them out, do them this way. Then I can see that I can just press this one and it will take everything back to its normal place. Okay, so basically here we have, for example, gold, we have US oil, spot, we have difference between US oil and US oil spot. US oil is a closed contract. Each 20 or 19 of the month, the contract is closed whether you are making money or losing money. But for US oil spot, it's an open contract, so it can stay more than a month or 2 months an open trade. Of course, you will have something swap on the trade. Now we also do have Nasdaq, Euro USD, and so many more. As we can see here on the left, we have more than 500 things to trade on. Now we're gonna go into gold. I'm gonna open the chart of gold. As you can see here, the current price is 1894. The market is moving. We have the sell price and the buy price. So basically, if I want to buy now gold, it's on 1894. Now we can see here the spread or the pip is moving. The difference between 94 and 63 is around 30, so this is spread. Okay, and of course it's gonna be like moving significantly because at this time it's the high peak of the market. Okay, so how can I buy, or what is even this number? This number is the lot size. This is one lot. 0.01 is 0.01 is 1%. Excuse me, it's 1%. So whenever I'm buying with 1%. I can have 0.1, which is 10%, and I can move on to 0.02, 0.03, as much as I want. I can go into 0.1. This is 10%. Okay, so I'll be buying gold here, for example. I buy a position, it's open now. Okay, so whenever I open this position, this trade will be moving. Now, how can I go and check my open trades? I go down to trade. This is my margin. This is the position I opened. Here it's written buy. Size 0.1, which is the lot size. Symbol is XAU USD. Price that I bought on is 1894.2. I didn't plug any stop loss or take profit because it's a short trade I'm willing to enter with. And for example, let's edit this, modify, and I'll plug my take profit at 1900, or let's make it 1897. So in this way, at 1897, as we can see here, the red one, whenever it reaches here, the position will be closed with profit. Okay, and then we do have here also, we can work with our charts, add some symbols, candlesticks, bar chart, line chart. We'll be getting into this more and more next week and the week after, and you will be understanding well how to use every single feature in MetaTrader, whether on your PC, whether on your iPhone, Samsung Tab, anything. But now basically we're getting into the terms that we learned today. Now we do know what's sell, what's buy. Whenever I predict or I see the market going up, I press the position of buy. Whenever I see the market going down, or there is something that indicator that tells me that the market is going down, I press on sell. Here we changed the number of lot size. As we said, also the number difference between this amount and this amount is spread. Spread is important for us. From here we can also open a new order. We choose the symbol that we want. We choose the volume, which is the lot size. We plug in the stop loss, the take profit, and here we always market execution, buy or sell. It depends on what I want. Now we have different time frames for looking at the chart. We have the 1 minute, we have the 5 minutes, we have the 15 minutes, and we have the 30 minutes, and moving on to H1, H4, which is 1 hour, 4 hours, daily, weekly, and monthly chart. Now, if you want to go back here, and I can use this, if you can see it, it's got cross here. So basically I can take it from here and I plug in into this point. We can see exactly what point it can give us more into. It's like a magnifier basically. Okay, and here we can choose whatever we CFD, the different currencies, commodities, GER, coffee, cotton, coke, sugar. You have so many things to choose and to trade on. Okay, so now we're gonna get back to this. We still have an open position here, as we can see here. Now, for this session, what we did was we just went through the basic terms that we need to know in order to build our next session based on the terms that we learned today. I'll be sending also the presentation for you to have a recap before our next session, which is level 2. Level 2, we will be starting to know how to plug in these trades and what charts we need, how to read the chart. or basically how to know when I should open this position or why I shouldn't open this position, and how to manage my risks. This will be level 2. Level 3 will be how to read the candles, how to read patterns, how to read market movements. And also we'll be discussing the news. We'll be discussing how news affect the market. Level 4 will be into analysis and strategies that we will be applying all together. We will have some real life examples. We will trade maybe during news coming out. We will see how the market will be volatile and how it will be moving. Now, before ending, let me just share with you these 2 links. So on the left, you can join our Telegram channel and you can follow us on our social media platform. This will allow you to know more and stay updated with the market updates and what's happening. And the Telegram channel will help you a lot and will guide you in so many things. And on the right, please, if you need any one-on-one coaching or you need any questions, any suggestion, any tip, any advice, any help, anything you need, I'm more than most welcome to help you with this. You can just scan on the right my WhatsApp, and on the left you can scan the barcode to access all our social media and Telegram link. And please don't forget to follow us and to join our Telegram channel. And if you need anything through WhatsApp, I'm more than uh, happy to hear and listen and to help. And lastly, saying if you can even give us a review on Google or Trustpilot, I'll be also sharing this through the email. And I'll be waiting for you next week. And moving to level 2, level 2 will be much more deep and important. Now, for tomorrow, you will be receiving a recap of this, what we talked about today. Just go over it again and get back to me through WhatsApp if you need any questions. And next week, we'll be moving into level 2. You will be receiving a certificate for level 1, which is the basics of trading. And at the end of this, after these 4 levels, you will be taking a trading like certificate that will allow you that you are now good to go with your trading journey. Thank you so much for attending and see you next week.